The 2025 real estate predictions are in, and trust me, you don't want to miss this. My name is Pawel, and I am the founder and broker of record here at Coral Realty in Toronto. In this video, we'll break down 5 key predictions for the 2025 real estate market, from expected price growth in freeholds to why rents might drop, the impact of record condo completions, and what lower interest rates could mean for buyers. First, let's talk about the elephant in the room. Why are predictions so hard to make? Real estate depends on a web of factors: interest rates, government policies, global events, local market dynamics. But trends, they're patterns we can observe today that give us a sense of direction. For example, Toronto's condo market has been struggling for a while, and with a record number of completions expected in 2025, we know inventory will be high. That's a trend. Predictions, on the other hand, rely on what might happen, and in 2025, there are a lot of wild cards. Will Canada see a new conservative government? How will changes in immigration policies play out? And what about the Trump effect? Are tariffs coming? So while we make predictions, remember that trends often tell a more reliable story. Now, let's dive into the first one. Prediction number 1. Detached prices will increase by 5 to 7%, while semi-detached will increase between 7 to 10% by the end of 2025. One major reason is CMHC's new rules allowing buyers to put down just 10% on homes priced up to $1.5 million. You can buy a $1.5 million home with as little as $125,000 of down payment. This is a huge shift, making semi-detached and townhomes in that price range much more accessible in Toronto. Now, in 2024, for most of the year, we saw between 2.5 to 3 months of detached inventory, while semi-detached homes hovered in the 1.5 to 2 months range. However, at the start of 2024, when we saw the biggest price movements, detached inventory was as low as 1.5 months inventory, and semis were less than 1 month. But here's the big picture. We're simply not building any more freehold. The days of large-scale freehold development are long gone. Now it's mostly small infill projects here and there, and that's not enough to meet demand. Supply and demand is a fundamental reality, and with the demand for freehold staying high, prices will naturally keep rising, especially as rates come down. For higher end freeholds between 1.5 to 2.3 million, we could see some improvement as buyers stretch their budgets. And with interest rates coming down, even luxury properties over 4 million might see a resurgence of interest. Bottom line, expect more activity across the freehold market. If you're finding value in this video, do me a favor, please hit that like button and subscribe. It really helps to grow our channel. You can also book a call with myself or my team in the link in the description below. Prediction number 2, rents will drop. Sorry, landlords, but rents are probably going to drop by 5% in the downtown core, while in the 905, we could see a drop of 7 to 10% in 2025. And here's why. First, we're expecting immigration numbers to reverse, with reports suggesting up to 4 million people may leave Canada next year. International students and temporary foreign workers represent upwards of 50% of rental demand in the GTA. Take that in for a moment. That is a big number. On top of that, the GTA is set to see a record 40,000 new condos completed, nearly double the usual number. That's going to flood the market with rental units and create a lot of competition for landlords. An important note is that the majority of the 40,000 new condo completions will be happening in the 905 regions, where in 2024, the majority was in the 416. The combination of high completions and lower population is likely to lead to decreases, with the 905 feeling the brunt of the impact. So if you're a renter, this is your time to negotiate. You'll likely have more options, and landlords may start offering deals or incentives to keep you and their units occupied. Now, for landlords, here's my advice. If you already have tenants, do what you can to keep them. Maybe make a few small upgrades. Freshly paint the unit, offer incentives, or even just improve communication. Anything to make them think twice about leaving, because once they're gone, it might take a lot longer, and possibly a rent reduction to fill that vacancy in 2025. Prediction number 3. We predict that condo prices in the 416 are likely to rise by 2 to 5%. As rates come down, we expect to see more absorption, and with further rate cuts, more buyers return to the market, especially as the price gap between condos and freeholds grow. In the 905, things won't be as rosy. We are predicting prices to decline between 5 to 7% in 2025, and a big reason for that is massive influx of new inventory and lower lower rents. As mentioned earlier in this video, we're expecting around 40,000 new units to hit the market this year, double what we typically see, and the majority of those completions are happening in the 905. So there's going to be a lot more competition. That said, not all condos will feel the same impact. The ones designed for actual living, spacious layouts, functional kitchens, and solid amenities will do well. Families and professionals are drawn to those types of spaces, so they'll be more valuable. But the smaller shoebox style units, you know exactly which ones I'm talking about, those might have a tougher time. People are moving away from cramped spaces. So if you're an investor holding one of these, it's time to think about your next step. Maybe selling or reinvesting in a bigger unit, or maybe it's making some upgrades to make the space more appealing. Either way, the days of easily renting or selling tiny units at a premium are fading, and adapting now will make all the difference. Prediction number 4, developers pivot to purpose-built rentals. Let's talk about what's happening with pre-construction condos because it's a big deal for 2025. Pre-construction sales have been struggling for a while now, and developers are starting to make some major adjustments. Investor interest has effectively disappeared. Higher interest rates, tighter financing, falling rents, and declining returns have made people much more cautious about pre-construction units. And frankly, it's about time. We've been saying this for years. To make things even more complicated, we're expecting a wave of defaults as many of the units set to be completed in 2025 were purchased during the peak of the market. Some buyers are finding it harder to close, whether due to higher interest rates, stricter lending criteria, or just the overall market cooling off. This is putting even more pressure on the pre-construction sector. Expect to see many stories in the news in 2025 of developers suing buyers in default. And it won't just be lost deposits, they'll be going after the loss in value from the original sale price to the current sale price. I have mixed feelings about this. On the one hand, I feel awful for those who are about to lose hundreds of thousands of dollars because they were given poor advice. On the other hand, many people took big risks. And with that comes possibility of big rewards or significant losses. Resale properties tend to be more like blue chip investments. There might be dips, but overall, they're more stable and reliable. Pre-construction, on the other hand, often felt easy, like overnight money. So developers are responding by shifting their strategy. Instead of building condos for sale, more converting their projects into purpose-built rentals. It's a smart move because it helps meet demand for rentals, especially with immigration slowdown, expected to ease some of the rental market crunch. But it's also a clear sign that the market for investor-focused condos like those small units designed purposely for rental income is over. And it may never come back. This shift could actually be a good thing for renters as it'll increase the supply of professionally managed rental buildings with better amenities and stability. But for condo investors and developers, it's a sign of a changing landscape. The old model of selling pre-construction units to investors just isn't working like it used to. And we'll probably see more developers pivoting to rentals to adapt to the new reality. Prediction number 5. Interest rates will continue to drop in 2025 with the Bank of Canada likely reducing rates by 25 basis points on January 29th and the overnight rate potentially bottoming out at 2.5% by year end. This trend should encourage increased buyer activity, particularly in the sub $2 million market, and drive more momentum in the real estate sector. That said, fixed mortgage rates may not decrease as quickly, and global uncertainties such as the potential US tariffs could impact the economy. If inflation surges, there is a risk of stagflation, which would slow growth and negatively affect the market. For now, however, rate cuts appear to be a positive signal, likely attracting more buyers and revitalizing market activity. So those are our top predictions for the 2025 real estate market. What are your thoughts on where things are headed? Do you agree, disagree, or have predictions of your own? Let us know in the comments below.